You had the right trade. You had the right entry, the right stop loss, the right target. And you still lost money. Not because the market beat you, because you beat yourself. You know that moment, price ticks against you 5 pips, then 10. You're watching, your finger is hovering, and something in your head says, just move the stop a little. Just give it room. And you did it. Stop gets taken out. You re-enter immediately. Bigger size this time, because now you need to make it back. You didn't lose the trade. You lost the trade, then lost 3 more trying to unlose it. That's not bad luck. That's not a bad setup. That's what untrained discipline looks like. And in the next 12 minutes, I'm going to show you the one thing that fixes all of it. It's not a new indicator. It's not a new strategy. It's not more screen time. It's closing the laptop. Section 1. The discipline myth. When most traders imagine a disciplined trader, they picture someone at a desk, multiple screens, watching every candle, reacting fast, in control. That image is destroying your account. You've probably thought, if I just watch more closely, I'll catch it before it goes wrong. I'll react faster. I'll be better this time. I have thought that too. Every losing trader has thought that. The entire trading industry sells you the idea that discipline means more attention, more presence, more reactions, more control. 12 monitors, a man in a suit who never sleeps. That image is not discipline. That image is anxiety with an expensive setup. Real discipline looks nothing like that. Real discipline is not about what you do. It's about what you refuse to do. Your job as a trader ends the moment the order is live. Everything after that is the market's job, not yours. Think about the last trade that worked perfectly. The ones that worked perfectly. Were they the ones you watched the hardest? Or the ones you placed and forgot about? You are not managing the trade. You are managing your fear. And fear has never been a profitable strategy. Section 2. What revenge trading actually is. Let's talk about revenge trading. Because every trader thinks they understand it. Almost none of them do. Most traders think revenge trading is a decision. It's not. Revenge trading is a state your brain enters. And here's exactly how it starts. You know this sequence. You've lived it. Trade goes against you. You're watching. Price hits your stop, and immediately, without even thinking, you re-enter. Same direction. Maybe bigger size. Because you saw the setup. It was right. The market is wrong. You need to recover. That feeling, that electric urgency to get back in immediately, that is not your trading instinct. That is your ego on fire. Here's what revenge trading actually looks like. Trade 1. Stop hits. Loss. $200. Trade 2. Re-enter same direction. Bigger size. Loss to $400. Trade 3. Double down again. Now you're down $1,100. Trade 4. You're not even following your system anymore. Pure desperation. 4 trades. Only one of them was in your plan. The average revenge trader doesn't blow their account on one bad trade. They blow it on the 4 panic trades that follow, while trying to undo the first one. You've done this. Maybe not 4 times in a row. Maybe just once. But you remember that feeling. The sinking realization that you just turned a $200 loss into a $1,000 problem. And the worst part? You knew. You knew while you were doing it. You just couldn't stop. Here's the question nobody asks. Why couldn't you stop? Because the laptop was still open. The screen was still live, and your brain could not let go of what it was watching. Section 3. Why willpower doesn't work. Here's what nobody in trading will say to you directly. Willpower is not a strategy. It is not a skill you can train yourself to have more of in the moment. And it is absolutely not a substitute for system design. You've told yourself, next time I'll be stronger. Next time I'll just sit on my hands. Next time I won't touch the stop. And then next time comes, and the screen is open. And the price is moving. And it all falls apart exactly the same way. That is not weakness. That is neuroscience. When a live trade is moving against you, 2 parts of your brain are fighting. Your prefrontal cortex, The part that made the plan, set the risk, identified the setup, starts losing the argument. And your amygdala, the threat detection system, the part that evolved to protect you from predators, takes over. Your amygdala does not understand Forex. It understands one thing: threat, react, survive. The longer you sit watching a losing trade, the less you are the trader who planned it, and the more you are an animal trying to escape danger. And here's the part nobody wants to admit. That process cannot be overridden by trying harder. You cannot think your way out of an amygdala hijack. You can only remove the trigger. The trigger is the screen. Telling a trader to just be more disciplined while staring at a live chart is like telling someone on a diet to just have more willpower while working in a bakery. The environment is the problem, not the person. You cannot hold discipline against a live market feed indefinitely. Nobody can. The traders who look disciplined have not conquered their emotions. They have removed the conditions that trigger them. The market does not reward the trader who watches the hardest. It rewards the trader who interferes the least. Section 4. Close the laptop. Your actual edge. So here's what actually works. No new indicator, no new system, no meditation app. Set the stop loss. Set the target. Close the laptop. That's it. But here's what most traders completely misunderstand about this. Closing the laptop is not passive. It is not giving up. It is not being lazy. Closing the laptop is the highest conviction act a trader can make. Imagine this. You've done your analysis. You've sat with the chart for an hour. You've identified the structure, the level, the entry. You know why you're in. You know where you're wrong. You place the trade, and you close the laptop. That is not indifference. That is total confidence in your own work. Closing the laptop is not surrendering the trade. It is completing it. What happens when you close the laptop? Stop loss holds because you didn't move it out of fear. Target holds because you didn't close early out of impatience. System runs clean. No interference from emotion. Next trade is evaluated with a clear head, not a wounded one. Capital is protected from your own worst impulses. And when the trade closes, win or loss, you come back to a result. Not a crisis, not a spiral, not 4 revenge trades deep. A result you can review, learn from, build on. A trader who doesn't watch gets a result. A trader who watches gets an emotion. Only one of those is tradable. Section 5. Same trade. 2 traders, same setup, same candle, same week. GBP/USD. Clean break of structure. Both traders enter long. Stop below the swing low. Target at the next resistance. Risk to reward 1 to 3. Everything identical except one thing. Trader A. Laptop open. Price moves up 12 pips. Trader A feels it. You know that feeling, that small hit of validation. See? I knew it. I was right. Price pulls back 18 pips toward the stop. And now you know that feeling too. The tightening. The bargaining. If it just holds here, Trader A watches the candle approach the stop level. His hand moves. Stop moves 10 pips lower. Just give it room. Price takes the new stop. Loss is bigger than planned. Trader A re-enters immediately. Bigger size, needs to recover. Price reverses Visio and hits the original target. Without him. He had the right trade. He sat there and talked himself out of it. Trader B. Laptop closed. Price moves up 12 pips. Trader B doesn't know. Price pulls back 18 pips. Trader B doesn't know. Stop holds. Price reverses. Target hits. Trader B opens her laptop. Logs the trade. Makes dinner. Same setup, same market, completely different outcome. Trader A ended the day down more than he risked. Not because the trade failed, the trade won. He ended down because he watched it. Trader B ended the day up exactly what she planned. The market didn't punish Trader A for being wrong. It punished him for staying at the screen. Section 6. How to build this habit. Knowing this and doing this are two completely different things. So let's make it operational. Step 1. The pre-close checklist. Before you close the laptop after placing any trade, answer these 5 questions out loud or in writing, every single time. 1. Is my stop loss at the level my analysis determined, not where it feels comfortable? 2. Is my target at the logical structure level, not where I hope price goes? 3. Have I calculated the exact dollar risk on this trade? 4. Is my position size correct for my account rules? 5. Is there any real reason to stay at the screen, or am I just afraid to leave? That last question is the one, because most of the time, if you're honest, the answer is, I'm just afraid to leave, and fear is not a reason to stay. The checklist is not a formality. It is the last barrier between your plan and your panic. Step 2. Create a physical exit ritual. The act of closing the laptop must become intentional, not passive, not just minimizing the window. A deliberate physical act that signals the trading session is complete. Some traders say it out loud, the trade is placed. My job is done. Some write the trade in their journal first, then close. Some physically stand up and leave the room. Pick whatever works for you, but do it the same way every single time. That consistency is what trains your brain that the decision is made. The loop is closed. There is nothing left to manage. Discipline is a feeling before it's a habit. The ritual creates the feeling. The habit follows. Step 3. Hard screen at time rules. Write these in your trading plan, not as suggestions, as rules. Day trade open. Check every 60 minutes maximum. Swing trade, check at session open and close only, not between position trade, once daily, end of session. Nothing else. The same way your stop loss is non-negotiable once the trade is live, your screen time rules are non-negotiable too. Your trade does not need you. Stop acting like it does. Step 4. Track it. For the next 30 trading days, add one column to your journal. Call it watched or walked away. After every trade, note which one it was. Then track your results in both columns separately. Give it 4 weeks. Almost every trader finds the same thing. Walked away trades outperform watched trades, often by a factor of 2 to 3, even when the setups were identical. The data will be uncomfortable, and it will be the most convincing argument you've ever made to yourself. Section 7. But what if? I know exactly what you're about to say. You've been sitting here thinking, okay, but what about news events? What if it gaps? What if I miss a better exit? I've thought all of those too. Every single one of them felt like a good reason to keep watching. They're not. What about major news? Don't trade before scheduled high-impact events. NFP, FO, MC, CPI, rate decisions. They're on the economic calendar every week in advance. If you placed a trade right before a red folder event and you're nervous, that is an analysis problem. The fix is your pre-trade checklist, not the screen. What if it spikes through my stop? Your broker will execute at the next available price. You cannot prevent slippage by watching it. No trader in history has ever stopped a gap event by staring at their screen harder. What you can do, use guaranteed stops where available, trade markets with controlled spreads and size positions so that even maximum slippage doesn't critically damage your account. You protect the trade before you place it, not by watching it after. What if I miss a better exit? You will. Sometimes. Price will overshoot your target. You'll wish you trailed the stop. And sometimes you will trail it, and price will reverse. And you'll wish you'd taken the original target. That is trading. The goal is not to perfectly optimize every single trade. The goal is to execute your system consistently enough that the edge compounds over time. Every time you override the system, you introduce variance that destroys the edge, even when the individual decision felt smart in the moment. A consistent, uninterfered 45% win rate at 2R average will outperform a brilliant system that gets constantly overridden by the person running it. Closing. You already have a trading strategy. You already know how to read a chart. You already know where the stop goes and where the target goes. You've been in the right trade. You've seen the setup play out exactly the way you planned, and somehow still ended up with less money than you started with. That feeling is specific. That particular frustration of being right and still losing. That's not about trading. That's about what happens after the trade. The only thing standing between you and consistency is what you do after the order is placed. The market does not care how long you sit in front of it. It does not reward your attention. It does not respond to your intensity. It runs its own process, in its own time, completely indifferent to whether your laptop is open or closed, but your account is not indifferent. Your psychology is not indifferent. Your next trade is not indifferent, because every time you interfere with a trade you placed correctly, every time you move the stop or close early or revenge trade after the loss, you are not trading the market. You are trading your own fear, and fear has never been a profitable strategy. Set the stop, set the target, close the laptop. That is not the easy choice. It is the only choice that actually works. The traders who compound over years are not smarter than you. They do not have better setups. They do not have secret data. They have built one habit you can start from the very next trade you place: the discipline to do nothing. See you in the next one.